Imagine this. In 2026, AI isn't just chatting, it's running multi-billion-dollar banks on autopilot, executing trades, spotting fraud, and minting profits while humans sip coffee. But what if these agentic AIs go rogue? Discover the mind-blowing revolution that's already here and how it could make or break your future. You won't believe what's coming next. Hit that subscribe button and smash the like right now. If you want to stay ahead of the AI takeover, do want to miss out on the next big reveal. Hey everyone, welcome back to the channel. It's January 19th, 2026. And if you're like me, you're probably wondering how the world of finance is flipping upside down thanks to something called Agentic AI. Gone are the days of those clunky chatbots from 2024 and 2025 that just answered questions or gave basic advice. Now, we're talking about AI that's autonomous AI that acts like a digital colleague, executing entire workflows without needing a human babysitter. Think about it. What if your bank account could optimize itself, spot risks before they happen, and even negotiate deals on your behalf? Sounds futuristic. It's happening right now, and it's exploding in the financial sector. But hold on, why should you care? Because this isn't just tech hype. According to the latest reports from Accenture, Deloitte, and PwC, Agentic AI is projected to unlock trillions in productivity gains, reshape how banks make money, and even create new business models. In this video, we're diving deep into the Agentic AI revolution, what it is, how it's different from the old school AI, its massive impact on finance automation, the real profits it's generating, and the curiosities that will keep you glued to your screen. We'll break it down step by step, with real-world examples, shocking stats, and tips on how you as an everyday investor or business owner can ride this wave. By the end, you'll be wondering, is Agentic AI the ultimate game changer or a ticking time bomb? Let's jump in and find out. First off, let's clear up what Agentic AI really means. Back in 2024 and 2025, AI was mostly generative like ChatGPT or Grok for creating content, answering queries, or suggesting ideas. It was reactive. You ask, it responds. But Agentic AI, it's proactive and autonomous. These are AI systems built on large action models, LLMs, that don't just think, they do. They interact with tools, APIs, and even other AIs to complete complex tasks from start to finish. Imagine an AI that doesn't suggest a stock trade, analyzes the market, assesses your risk tolerance, executes the order, and then monitors it for adjustments. No human intervention needed for low-risk decisions. Curious yet, according to Gartner, by the end of 2026, 40% of enterprise applications will have Agentic AI embedded, up from less than 5% last year. That's a massive leap. Now, why is this blowing up in finance? Let's talk automation. Big banks like JP Morgan are leading the charge. In their latest discussions at industry conferences, they've revealed how Agentic AI is replacing entire workflows. Take risk analysis. Traditionally, a team of analysts pores over data for hours to spot potential loan defaults or market crashes. Now, Agentic AI is do it in seconds, pulling from real-time data sources, predicting outcomes with 95% accuracy per Deloitte stats, and even flagging anomalies that humans might miss. But here's the curiosity kicker. What happens when an AI spots a black swan event like a sudden geopolitical crisis and automatically hedges billions in assets? JP Morgan's pilots have shown agents executing complex trades that once required a full trading desk. And it's not just JP Morgan. Citizens Bank reports that 82% of mid-sized companies and 95% of private equity firms are implementing Agentic AI in 2026 for everything from cybersecurity to financial reporting. Picture this scenario. You're a small business owner in Brazil, applying for a loan. In the old days, you'd wait weeks for approval. Now, an Agentic AI at your bank reviews your financials, cross-checks credit scores via APIs, assesses market risks, and approves or denies in minutes while suggesting personalized terms. Mind-blowing, right? But wait, there's more. These agents they handle fraud detection by monitoring transactions in real time, using patterns from billions of data points. Wolters Kluwer predicts that 44% of finance teams will use Agentic AI this year, a 600% jump. Curious about the dark side? What if a hacker tricks the AI into approving a fraudulent wire transfer? Banks are building governance-first designs, with human overrides and audit trails. But it's a race against evolving threats. Shifting gears to the profit impact, this is where it gets really exciting. The market isn't buzzing about companies selling AI tech anymore. It's about who's actually profiting from it. KPMG estimates global spend on Agentic AI at $50 billion in 2025, ballooning to $236 billion by 2034. But the real ROI, research from Neuron's lab shows organizations can get a 2.3x return on Agentic AI investments within 13 months. For banks, that means $3 trillion in global corporate productivity gains over the next decade per World Economic Forum insights. Take Accenture S10 bank concept. One person managing an AI team that delivers exponential impact. Agentic AI shatters capacity barriers, allowing banks to handle 10 times the workload with the same staff. Here's a curiosity that'll hook you. In retail banking, Agentic AI is creating agentic money, smart funds that optimize themselves. Your savings account could automatically shift to higher yield options based on interest rates, or even execute micro-investments in EVs or solar tech without you noticing. Accenture warns this accelerates fund shifts, forcing banks to reprice products fast. For investors like you, this means better returns but also more volatility if AIs start competing en masse. And in trading, Agentic AIs are automating B2B transactions, reducing errors by 80% per business. But imagine the ripple. If every bank has super smart agents, does that level the playing field or create AI arms races? Let's get into the nitty-gritty of how Agentic AI works autonomously. It's not magic hits built on protocols like MCP, Multi-Agent Communication Protocol, and A2A Agent-to-Agent standards, emerging as the Internet for Agents in 2026. Machine Learning Mastery highlights multi-agent orchestration as trend number 1. Think microservices for AI, where specialized agents collaborate. One agent analyzes data, another executes trades, a third monitors compliance seamlessly. PwC predicts agents will shine in finance functions like invoice processing, reconciliation, and anomaly detection, freeing humans for high-value tasks like revenue growth or dynamic pricing. Curious example, Wheaton Precious Metals from our Silver Video Week could use Agentic AI to forecast commodity prices, execute hedging contracts, and even negotiate with miners via APIs. In your portfolio, an agent might spot silver hitting $93 per ounce as it is today and automatically buy PSLV shares if it fits your strategy. But here's the twist. Decay in leveraged products like a GQ. The AI knows to avoid long holds. Stats from Blue Prism show 78% of execs rethinking operating models for agentic value, and in regulated industries. Vertical AI agents for finance ensure compliance, with SAS predicting semi-autonomous systems, handling customer requests and fraud at scale. Now, for the impact on profits. Focus on ROI, not hype. Deloitte says 50% of GenAI adopters will deploy agentic pilots by 2027, but failures loom if processes aren't redesigned. Gartner warns 40% of projects could flop by then, not from tech fails, but bad implementation. Successful cases. Banks using cloud platforms from AWS or IBM for brand-aligned agents. IBM's trends point to super agents with control planes for multi-agent dashboards. Cost optimization. FinOps for AI is huge. Agents making thousands of LLM calls daily need efficient architectures to avoid million-dollar bills. Let's tease some curiosities. Did you know Agentic AI could create silicon-based workforces? MIT Sloan outlines for business models, existing plus augment old processes? Customer Proxy AI is your advocate, platform orchestrator, managing agent ecosystems, and autonomous enterprise full AI run ops. In finance, a Customer Proxy AI could manage your portfolio autonomously. Scary or revolutionary. And in AML, anti-money laundering, Agentic AI redefines it. Per AML intelligence autonomous systems executing KYC reviews and investigations. For Brazilian investors with Avani or Interactive Brokers, you could integrate agentic tools for real-time portfolio tweaks. Tax tips. Declare gains at 15 to 22.5%. But curiosity, BRICS rumors of silver backing. Agentic AI could simulate currency shifts. Wrapping up, Agentic AI isn't a tool, it's a teammate transforming finance from reactive to proactive. With $52 billion market by 2030, it's minting profits through automation and ROI. But risks, governance, biases, failures. Your choice. Adapt or get left behind. What do you think? Game changer or overkill? Drop in the comments. If you loved this deep dive and want more on AI revolutions, smash that like, subscribe, and turn on notifications. Next up, how Agentic AI hits silver mining. Good luck riding the wave.